Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so we've had another strong move higher today, breaking through the 6,900 level. 6,900 for us confirms the uptrend is still in play, so now we've cleared through that. 72 is the next key level up through here, which was the all-time high back through February, March last year. So it looks like we're set to come up and test that at some point in the very near future. There's still plenty of momentum in the current move. So yeah, things are looking pretty damn promising. Now, if we go across and look at the S&P 500, which was closed last night. So what we're looking at here is Friday's trading at this point of time. They closed on a high Friday, and then in the past two sessions on the futures, we've actually seen them push a little bit higher again. So as long as they open roughly where the last two sessions of futures are suggesting, we should see an open around 39.62 where approximately my mouse cursor is now. So things are looking pretty good. Now, if we can achieve that tonight, once again, I think we'll see further movement on our market tomorrow. So I guess at this point, from a technical standpoint, trends are up. We're seeing signs of continuation, and there's still plenty of momentum in these moves at the moment. We aren't seeing those prolonged months and months of sideways movement, which gets us a little bit worried that we're finding a top. Okay, so at this point, momentum's still there, uptrend's still in play. We're still feeling pretty good. Okay, so a few things to talk about. Obviously, we've seen oil push up above 60. That's because one of the main oil refineries in Texas has had to close on Monday. So even though they've been closed for public holiday, the US haven't really had a chance to react to this. But the oil market has. All right, so we've seen push up. I think crude got as high as 61 US. So that's looking pretty good, and that's helped markets, especially around the energy side of things, move. Our energy sector in particular has held back a tiny bit. Still can't quite 100% put my finger on why we haven't seen the same strength we've seen in the US. But nonetheless, maybe there's a few clues in BHP's report today where we saw the likes of their oil and gas side of the business underperform completely versus copper and iron ore. And if that's kind of any hint into what we're going to see from the other energy players in Australia reporting come Thursday, Santos and Woodside, perhaps that's why investors are still feeling a bit nervous around that space. But if crude can manage to hold up around the $60 level, that's really outperforming what most analysts were expecting for this year. So let's just see if we can hang around those levels. Perhaps there is still plenty more recovery for these energy stocks to come. We'll know more after Thursday. But yes, definitely that snap cold winter throughout Texas has stopped some of that supply of oil onto the market, and that's why we're seeing high prices at the moment. But we're coming into sort of that middle range of the reporting season in Australia at the moment. What we're seeing, the big takes for me, banks, although reporting's fairly flat compared to this time last year, what we're seeing is a very good recovery story there. So far, we saw CBA report half year. We've seen NAB this morning report quarterly. And what we've taken from both of those reports is that they're well and truly on that recovery path. 90% plus of their frozen loans, business and residential, have all been sorted out, back onto repayment or been closed down. So that's all been cleaned up. There's not much left to go there. So that's really good, promising signs. CBA paid out $1.50 div, only 50 cents lower than this time last year. And seems that they're on a fairly good path to getting back to their normal dividend payouts coming into August. Not sure if they'll pay out the same than August 2019, but I think they'll get pretty damn close the way things are looking. So there's a renewed optimism around the banks. That's to do with maybe a little bit around the reporting, but also if you go look at the bond yield curve, it's steepening, right? So we saw a complete flattening of the US yield curve. Ours flattened off a bit as well over the last few years, and now we're seeing a nice steep yield curve again. That's going to help the banks' net interest margins, thus their profitability, and therefore the banks are still looking pretty good, right? CBA perhaps maybe finding a bit of a top for the moment, up near the $90 mark. probably looking a little bit pricey, where ANZ, Westpac and NAB still got a little bit more to go before they hit their highs of February 2020. Miners, well, we saw BHP report today, missed a little bit on earnings, okay, perhaps beat on the iron ore front and probably bet a little bit on the copper front, but obviously got pulled back a little bit by coal and oil. Even if you take out all their impairment charges of around $1 billion this year, they still missed on earnings expectations. So, wasn't a bad report. It was a good report, strong dividend, very strong dividend. That's going to help the share price stay up at these levels. But perhaps I would dare say Rio and Fortescue should report slightly better because they don't really have that oil exposure as BHP has had over the last 12 months. So I think we'll see Fortescue and Rio throughout the next few days. They should report extremely well on the iron ore front, and they should also be giving out extremely strong dividends. So I do suggest that looking at the underlying commodities, copper's been running hard, aluminium's been running well, even silver. Then you look at iron ore, which is closed this week for Chinese New Year. Iron ore closed near highs. So that whole space is doing extremely well, and a lot of that is really on the back of this recovery story from COVID around the world. Most countries are going to go towards infrastructure spending. We've already seen Australia do this. We're already seeing talks of this all around the world, which means that a lot of these commodities are going to be in high demand for the next few years. That's being starting to be priced into markets, guys. So I still believe materials have more upside to come. Look at your industrials as well. Things like CSR, James Hardie, BlueScope Steel. These types of companies should do very, very well throughout the next few years on the back of this infrastructure spending. Banks still got a bit more upside to come. And then, Thursday we're going to start analysing these energy stocks and just start to see whether they're going to continue to recover back up to last year's highs over the next 12 to 24 months. That's the other big question that we're playing out at the moment. But yeah, so plenty more reporting to come. CSL is another big one that we'll be looking at closely. That's a big mover. So yeah, keeping an eye on that. And yeah, we'll go from there. CSL is a hard one to predict overall as a company coming into reporting. Miners are a little bit easier because you look at their underlying commodities. So I've already talked about the miners. We'll keep pushing through. Vic lockdown last week. Once again, we're in a bit of a harsh lockdown. We're going to find out a lot more about this tomorrow. I guess there's a lot of talks about how we're going to come out of this lockdown this time around. Last time when we heard a 2-week lockdown, it lasted for 2 months. So hopefully this time they won't kick the can down the road too much further. I think most people are expecting, I guess, some relaxation of the lockdowns come tomorrow. But I think at this point we might start to see builders and tradies go back, but office workers might be a staged return coming into next week. So look, let's just see what happens. But the Vic lockdown is definitely going to weigh on the travel side of the market. So Sydney Airport and other travel stocks have sort of come back down a little bit since. So yeah, those travel stocks haven't liked this, but let's see what happens, because around the corner, guys, we've got vaccines in Australia. So we've seen the first delivery of the Pfizer vaccine hit our shores this week, but we've also seen the CSL manufactured vaccine being approved today. So we've seen a nice big push up in CSL. So with that vaccine rollout, obviously there's still a long time frame for the general population. So it's going to take a little while until that really feeds into the market and gets that travel sector moving again. But keep an eye on this news, right? This is the first stage of many stages in this vaccine rollout. And as it starts amping up over the weeks and months, keep an eye on certain stocks, okay? The recovery stocks are going to love it. The travel stocks are going to love it. You got to think about these value recovery space, the miners, the banks, the industrials, even the energy space. These areas that are going to benefit from very accommodative central banks and stimulus and infrastructure spending. If you can get the vaccine rolled out, but all this stimulus stays in the system for a few years, if the RBA continues to be very accommodative for the next few years, they've indicated they're going to do that till 2024. then these stocks could have heaps more upside. So stay optimistic, because a mixture of vaccine plus stimulus into the current economy here and in the US really screams a few years of strong economic growth. Okay, but we need the effects of vaccines and lockdowns to be stopped. We can't keep going into these snap, lockdowns for long periods of time and expect the recovery to continue. So it's a balance, right? We've got to find that strong balance to keep this economic growth alive. But right now, the optimism out there is very strong, right? So there's an appetite for risk. We're seeing that. We're seeing a sellout of bonds into equities. As long as that continues, guys, I really do think we're going to hit 72 in the short term. So really not a lot has changed, other than obviously we're VIX back in lockdown and the vaccine approval. US will reopen tonight to give us our next lead. But nonetheless, I can't stress enough at the moment. There's still more in this, guys. Okay, the markets are overheated. They are getting to that risky part. But there still could be that extra 6-month strong push up from here. Just go back and have a look what happened after the GFC when they put stimulus in the system, QE 1, 2 and 3, then markets can go up a lot more, even though everyone's screaming bubble territory. Okay, I think we were in a bubble for about 5 years before COVID popped it, right, in the market. So don't forget, the market can keep going up into bubble territory for a very long period of time when there's very accommodative central banks, and when there's plenty of money being pumped into the system via QE and other stimulus type programs. Okay, okay, so that's enough for me. I've babbled on enough now. Things are looking bullish for now, and we'll keep you updated every Tuesday, as we always do, if anything changes. So take care, happy trading, and bye for now.